All right, welcome back. So you've done all the hard work. You've analyzed the companies, you've read the reports, and you've made your investments in the Pakistan Stock Exchange. Fantastic. Now let's get to the best part, getting paid.
So that's the big question, right? How do you actually get your reward? Well, when a company you've put your money into does well, it often shares that success with you, its shareholder. And that reward? Well, it has a name, a dividend. It's the real, tangible return you get for believing in that business.
So first things first, let's define what this reward actually is. We're going to break down exactly what a dividend is, the different shapes and sizes it can come in, and what it all really means for you as an investor.
At its heart, a dividend is actually beautifully simple. Just think of it like this. It's a slice of the company's profit pie, and they're handing it directly to you. It's kind of like a thank you for your capital and your confidence. And for a lot of long-term investors in the PSX, the steady return is a huge part of the attraction.
Now, dividends can come in a few different flavors. The most common one is a cash dividend. That's just cold, hard cash paid right into your account. But some companies issue bonus shares, giving you more stock instead of cash. The timing is also a thing. You've got interim dividends, which are paid out during the financial year, and then final dividends, which come after all the annual results are in. Now, it's really important to remember, especially for our global investors, that cash dividends are subject to tax, and we're going to break that down in just a minute.
Okay, so a company decides it's going to pay a dividend. What happens next? It's not like a switch gets flipped and the money just appears. Nope. There's a clear, regulated process, a whole journey from the boardroom right to your bank account. Let's map out that countdown.
This journey has 3 key stops. First up, the announcement. That's when the company officially tells everyone, hey, we're paying a dividend. Second, and listen, this is the one you really need to circle on your calendar, is the record date. You absolutely must own the shares on this specific date to qualify for the payout. If you buy a day later, you're out of luck. And finally, you have the payment date. That's the happy day when the money actually gets sent to your account.
Now let's zoom in on the details that matter most to you as a global investor. Getting your money across borders involves a few extra steps. But don't worry, here is your checklist for making it a totally smooth and simple process.
The first thing you need to know is that you don't have to worry about filing some separate complicated tax form in Pakistan for your dividends. It's way easier than that. A withholding tax is taken out automatically, right at the source, before the money ever even hits your account. The whole thing is designed to be seamless. Let's just walk through a quick example so you can see exactly how this works. Imagine a company declares a dividend, and your share comes out to 10,000 rupees. Okay, so with a withholding tax rate of 15%, that means 1,500 rupees are deducted automatically. The net amount you actually receive in your account is 8,500 rupees. Simple as that, no extra paperwork needed from you.
Now here's a pro tip that could literally save you money. That 15% rate, it isn't always set in stone. See, Pakistan has what are called double taxation agreements, or DTAs, with a whole bunch of countries. You should absolutely check out the agreement between Pakistan and your home country, because it might mean you're entitled to a lower tax rate, and a lower rate means more of that dividend stays right in your pocket.
So where does the money actually go? For most foreign investors, it flows through one of 2 main channels, a special convertible rupee account, or SCRA, or a Roshan digital account, the RDA. But here's the key takeaway for both. The process is simple. The net dividend lands in your account in Pakistani rupees, and, this is the important part, it is fully repatriatable. That means you can send it home, no problem, no hassle.
Getting that dividend payment is great, but what you do with it next, that can be truly powerful. This is where we stop thinking just about income and start thinking about long-term wealth creation. Let's talk about the magic of reinvestment.
The long-term impact of this strategy is just staggering. Instead of just taking the cash, you use your dividends to buy more shares. Then, that larger stake generates even more dividends, which you then use to buy even more shares. You see what's happening? It's a snowball effect. And this compounding is one of the most powerful forces in finance, period. It can seriously accelerate your portfolio's growth over time. So here's the real takeaway. A consistent dividend isn't just about the extra cash. It's a powerful signal. It's the company's management telling you, we're confident about our future earnings. It tells you the business is fundamentally healthy and profitable. It's a sign of stability, and it's a sign of strength.
So as we wrap this up, I'll leave you with this one thought. A company's dividend policy is like a chapter in its financial story. It tells you a lot about its health, its discipline, and its commitment to you, the shareholder. So take a look at your portfolio and ask yourself, what story are my investments telling me?
Thanks for joining us for this explainer.